Okay, morning everyone. Welcome to our State of the Sector or State of the Charity Sector webinar. Today we're going to go through the findings from January to June 2022. I'm Josh, I'm the Product Manager for Insight Hub at Wood for Trees, and later on I'll be joined by John Kelly, who's the MD at Wood for Trees. So today we're going to go through three distinct sections. The first thing I'm going to do is just run through a little bit of information about Insight Hub, what it is and how we compile our benchmarks. Then, as I said, I'm going to hand over to John, who will run through some of the sector trends. And right at the end, there'll be a Q&A session. So on the right-hand side of your screen, there's a little questions area. You can leave questions in that section as we go through the webinar, and we'll come round to them at the end. So if anything captures your interest or there's something more you want to know, just leave a question in that question area and we'll get through to it. The presentation will probably take around 30 to 40 minutes with the Q&A included, and afterwards everyone will receive a copy of the recording as well. So if you do drop out for whatever reason, don't worry, you'll get a copy. So firstly, what is Insight Hub? And to understand that, you probably need to understand who Wood for Trees are. So we're an award-winning analysis and systems agency, and we specialize in particular in helping charities get more from their data assets. Here it says we help make things happen through data analytics, insight, and systems. We collaborate with the world's best-known not-for-profit organizations to improve fundraising efficiency and performance through effective decision-making. Now on to Insight Hub. Insight Hub is our online reporting, benchmarking, and insights delivery portal. It effectively has two main components. The first being a set of data aggregation and categorization processes to extract, transform, and load data into a centralized model, which we call the core charity data model, or on screen you can see the CCDM there in the middle. And then the second part is a front-end portal, which allows us to surface all sorts of reports, kind of standard, bespoke, benchmark to our users. The platform itself was built upon four core tenets, the first of which being accuracy. We want to deliver trusted, reliable data to your team in a timely manner. Very simple. Second being consistency. We want to deliver the data, but regardless of team, function, or business change, we want to steward and we want to surface your data in a repeatable fashion. So regardless of what changes externally, you'll still have access to the same data in the same way. Sharing allows us to, allows you guys to collaborate across teams on the same data sets, which means that everyone in the organization can pitch in. And finally, understanding. So whether you're an experienced analyst or new to the team, Insight Hub offers the flexibility to provide both simple and complex breakdowns of your data, and that's tailored to the audience at hand. So it's not like you go in, there's a mass amount of data thrown at you, but if you want that, you can dig in and find it. So currently, the platform has 22 reports, and they recover a wide range of strategic and tactical information. Things from basic recruitment and income tracking to detailed analysis on supporter churn, to machine learning predictive analysis and complex geodemographic breakdowns of your entire supporter base. At the moment, we've got around 20 million supporters, and those supporters represent 180 million transactions. So there's a lot of data on the platform. But today we're going to talk about the benchmarks. So all of the data within the CCDM is anonymized and aggregated into a set of top-line benchmarks, reflecting the structure of the underlying reports, which can be compared side by side with your organization's actual figures. This allows our clients to gauge exactly how well they're performing against the sector. And then every 6 months, we compile some of the most interesting metrics from these benchmarks in the form of a State of the Sector report, which is what you can see here. And John is going to take you through some of the most interesting findings within that report today. So over to you.
Great, thanks Josh. Thanks for that intro. And yeah, as Josh says, I'm going to now talk a little bit about what we've seen over the last 6 months, the patterns and trends in the data that Josh has just explained. It follows on, I guess, every year we do a full report in January, and we looked at 2021 back in January and saw some, some positive trends income rising, one-off giving rising, and lots of, you know, perhaps surprisingly sort of good results going on across the sector. And so the benchmarks are updated each month. So what that enables us to do is track those trends on an ongoing basis. And now we want to sort of show you what we're starting to see happen in the first 6 months of this year. And I guess particularly with the backdrop of the Ukraine war, and, you know, a very sort of outpouring of giving during that period, but then very sort of sharply followed or together with the cost of living crisis that everybody's talking about at the moment, and sort of starting to see signs of things coming through on that. So before I go into the detail, I'm just going to cover a couple of little highlights from this 6-month update. First of all, on a sort of positive side, we are seeing continued increases and continued trends upwards. So overall income on a like-for-like 6-month period, so comparing Jan to June this year with Jan to June last year, we are seeing income up 10%, and we're seeing recruitment continue to climb, and that has increased by 10%. Now comes the caveat. We are starting to see in the last sort of couple of months, May and June, some early signs of things starting to turn the other way, and we are starting to see a fall in recruitment and higher attrition rates, which are obviously affecting those results. You know, the supposition is that those are related to the cost of living crisis, and there are early signs of people having to sort of draw back a little bit on those things. I've done a number of talks over the last few months, and it's probably just around now that we're starting to see those signs come through. So that's the backdrop. That's the highlights. I'm now going to just run through a little bit of detail in terms of breakdowns on that income, on those supporters, products and channels, where they're coming from, etc., etc. So as I've just said, overall we're up 6% on income. So, you know, on face value, great result. You know, 2021 was a good year, and that has continued to climb. If we break that down on a monthly basis, we do see a sort of slightly different picture, as I've just sort of suggested. Really, we see a real boost in March, which was around the time of the Ukraine crisis, but we see that sort of small dip, or you know, not that small. It's a considerable dip in June. Indicating that the income is starting to struggle. Let's say overall the balance is up, but you know, June is down, and we'll obviously be tracking that through over the next few months to see how that continues. In terms of products, what we've seen is the real sort of winners here in the early parts of the year have been through high value giving and community fundraising. I think that's connected probably to the Ukraine crisis again. But that's the way that people have manifested their giving to that. We do see a small increase in regular giving, which is a good sign given the last couple of years where it did suffer a little bit. And the other probably notable point here is that one-off donations are down on year on year, and I'll come to that in the next slide. So there we go. If we look at one-off donations month on month, we can actually see that the fall in one-off donations is consistent across all months, apart from April, as I note there, where we seem to see a little bit of a boost. But year on year, month on month, income has been down. However, that is compared to a real high in 2021. Sorry, a real high in 2021, and to some extent in 2020 as well. So although that looks, it is not a great result, it does still mean that one-off donations are higher than they were prior to the pandemic, so back into 2019 and previously. So we saw a real spike during the pandemic in one-off donations. That has fallen back a bit, but the underlying trend is still upwards. Community giving, as I said, that's had good so far, and you can really sort of I think this slide highlights the reason behind that, a huge spike in March around the time of the Ukraine war. So that's what we see from there. Regular giving, we see a slightly different picture. So there, sort of month on month up to May, we have seen regular giving increase on last year. As I said, overall regular giving is up. However, as with the overall figures, we really see and highlight that dip in June, as I think people are starting to feel the pinch a little bit and having to make some cutbacks, and we are hearing anecdotally about, there are spikes in attrition. There are people having to pull back a bit due to the cost of living crisis. Finally, gaming, bit of a mixed year. It's a bit up and down. Some months up, some down. Overall, about sort of level. Not too much to read into that one. Then from a channel perspective, just briefly on that, looking at the breakdown of where income is coming from sort of 4 key channels that we track. At the bottom there, you can see digital income, and that does continue to rise. It's not rising as much as it was sort of during 2020 and 2021, but the trend is still upwards. What we do see there is also that direct dialogue is rising up, and that's countered a little bit by a fallback in the indirect mail. Obviously very much linked to the one-off giving side of things. So we are seeing a small fallback in direct mail, but again, compared to what levels were pre-pandemic, direct mail is still performing a lot better than it was back in 2019. So on to looking at supporters and recruitment and supporter files. So as I said in the highlights, recruitment is up 10% on last year. And if we look at the breakdowns here, first of all, we've got on the left there a breakdown by key products, and then on the right we've got the key channels. We can really see a sort of picture of what the underlying trends are there. From a product perspective, the growth is in regular giving, and if you look over on the channel, you can see a sort of comparable increase in direct dialogue. So that's really, the return of direct dialogue has enabled charities to get out there recruiting more volume again, and that's driving that recruitment up. And that's helped counter what we're seeing conversely to that is a fall in people being recruited onto one-off donations and through direct mail. So it's kind of flipping back to where we were pre-pandemic. As I've said, it's not flipped back completely, and I think that would be one of the interesting things to see and monitor over the weeks. Do we just return to what was happening prior to the pandemic, or my feeling is that this indicates that although there is a switch backwards, it won't go back, revert fully to where we were before. Looking month on month, as I sort of suggested earlier, we can see that sort of recruitment ticking along Jan through to May, but really does fall off a cliff a little bit in June. So early worrying signs of that impact as cost of living is hitting. The recruitment there is suffering, and May did fairly well through direct mail. I think that's probably again a boost in sort of emergency campaigns and stuff like that. and the underlying trend definitely falling down. So we look at what that means to the file size, number of sort of active donors that we're tracking across Insight Hub, over all the charities that are in there. What we see is that, you know, in Q1 there was a small increase, a continued increase, which is a trend we've been seeing for the last year or two. But that has fallen back in Q2, so we've seen a decline in file size for the first time in a while, and that, you know, you can see the red and the green lines crossing there. That's two factors driving that one, and as just highlighted, recruitment is falling, starting to become harder, but there's a double whammy then also of more people lapsing, meaning that we're seeing a sort of drop in those file sizes. Looking at product by product now. So first of all, looking at one-off donors, we see sort of a similar but perhaps more extreme picture of the overall one. So Q1 did fall, but Q2 we see a real drop in recruitment and an increase in number of people lapsing, meaning that we're seeing the file size fall. Community fundraising does continue to climb, so there are, you know, still people engaging and getting on raising funds through events and community-based activities. That increase that we've seen sort of over, you know, through 2021, it has slowed down, as you can see that the recruitment, the number of new people coming onto the files has fallen, but the good news is it's still tracking above attrition, meaning that, you know, file sizes are increasing slightly. Sorry. Gaming file has been fairly flat, you know, nothing really significant to highlight there. Perhaps the fact that the Q2 recruitment has gone up, which is counter to what we're seeing elsewhere. You know, perhaps is notable, but attrition is also rising alongside it to a degree. You know, probably a sign, as we know, I think when times become tight, then sort of value-driven giving, things that give people in return, are you know, come a bit more to the fore. So a couple of final bits on supporters and looking more at profiles and what they look like. So first of all, breaking down supporters by demographics. So we use a demographic tool, Sonar, which looks at people's people's life stage and people's wealth based on where they live. And what we see through sort of new supporters coming in 2022 is a continued trend of what we've seen in 2021 and even back into 2020, where we are still seeing a shift towards a younger and less affluent type of supporter. As I've said before, if you've been on these webinars before, that doesn't mean that, you know, all our supporters are now young and less affluent. The predominant supporter, charity supporter, is still older, retired, and more affluent. It's just the balance is changing, and we're seeing more and more of a slightly different audience come in to start giving, which I think is a positive thing and something we've got to try and build on and continue. And from a gender perspective, again, this is a trend that we have seen over the last few years. So there is a little bit of a continued trend towards more men giving. You know, still, as you can see from those bars, still very much predominantly female, but again, the balance is shifting slightly. Oh, one more slide. Always forget this one. One more slide on supporters, contactability. And I think this is actually quite a positive sign. So there's a fairly significant shift in the percentage of supporters that are giving consent. Mail remains steady at around 50%, but you can see email, phone and SMS to some degree sort of increasing there. So still a long way to go, but under the backdrop of tightened communications, GDPR from a few years ago, I think that shows that there's a lot of good work going out there. They're giving reasons for supporters to stay in touch and to be once communicated with, and we're seeing that come through in those results there. So on to the final section, which is what we call the engagement section, and we're looking at things like sort of ongoing. Oh, let me just magically move my slide there. We're looking at ongoing indicators of giving. So this includes lifetime value, cross-sell, and regular giving attrition, to see what's going on there and what that might mean to future giving of supporters as they're recruited. And I guess there are some not so positive signs coming through in this. First of all, from a lifetime value perspective, what we're here looking at here is the first 6 months of giving of people recruited in 2020 versus those recruited in 2021, and we are seeing a small fall in that. So previously, looking at this, I've always sort of felt there was an underlying trend of increased lifetime value, and that continues to some extent, but there's an early sign here that just from that initial 6 months of giving, that perhaps overall value of people is down. It's still to be seen whether those people continue to give and give into years 2 and 3 and provide more value. So we may still see that climb to some degree. What we're seeing product by product is a fairly similar picture, but I guess it's very much highlighted in the case of community fundraising and one-off donations. So we've seen a real sort of fallback in the value of giving to those types of products. So next indicator on this is cross-sell, and again we see a little bit of a sort of fallback here. So again, we're looking at the first 6 months of activity from these groups. 2020 was a good year for cross-sell overall, and sort of had been climbing previously. We see a small fallback in 2021, so the number of people who have given by another product that's not their recruitment product has fallen back slightly. And again, looking at it by the different products, we see that sort of fall across the board. I guess suggesting that people, they're coming on, they're giving a certain way, and at the moment they're not able to to stretch that and extend that to giving in other ways. And finally, regular giving attrition. Sorry to bring further sort of slightly bad news, but yeah, initial 6 month attrition of 2020 recruits compared to 2021, and we see quite a big rise in there, up from 22% to 30%. I think this one really has to be caveated that 2020 was a very good year for regular giving attrition because of the drop-off in direct dialogue. And really, I think as much as anything external here, what we're seeing here is basically as direct dialogue returns, as volume returns, inevitably that is going to be connected with a reduction, an increase in attrition. It's very hard to untangle those two things. There we go. That's the highlights. That's the trends that we're seeing. As we said, that'll take about half an hour, so it's about spot on. now going to open the floor to questions.
Cool. So I've got a number of questions here, and they're kind of split between questions about the platform and questions about what you've just gone through there, John. So I'll try and mix around a little bit. There's also been a couple of questions on definitions that I've replied to directly within the chat, so we won't go through them. But if you did ask a question about a specific definition, there'll be an answer in the chat for that. So a couple of the questions, probably best to start off with these because you've just covered them, John, are around why we're seeing 2021 versus 2020 data in those last few slides, so LTV, RG.
That's a good question. I mean, that's purely because if we're looking at 2022 recruits, those are people that have only just been recruited, so have had no time to give indications of where cross-sell, attrition, lifetime value, that value might be going. So we look back at those previous 2 years just to see what the sort of early trends are going on before.
Cool. And there's a very interesting question here that you might not be able to answer other than anecdotally. It's literally just come in. It says, how do these numbers compare to the pattern seen during the 2008 financial crisis?
Yeah, great question, and something that we've discussed a little bit before. Unfortunately, Insight Hub is only a couple of years old now. We do track data over the last 5 years or so. We do have data going back to the previous crisis, but we haven't had time to really sort of go into depth and look at that. I think that there are similar trends going on from anecdotally from sort of work that I did back then, that giving is restricted a little bit, but not impacted as much as we might hope. I think they are two different types of things. The 2008 crash and what we're seeing today although they're downturns in economics, they are different things. So we might see different results. One of the things I think really that we did see in 2008 and get really to unpick in terms of what we're seeing here now is where we saw reductions. It was in lower value giving, and those are the people that hit most. So the high value givers, regular givers with high value, those sort of audiences that come from a sort of wealthier, more retired position, may hold up better. And I think we are seeing and hearing a bit of that anecdotally. It's too early really to understand that, but I think that's something that all charities should be tracking. I guess what the difference here that I think we might see is that the economic crisis in 2008 was more about sort of job losses and people really struggling in that sense. So in terms of the core charity audiences of retired and wealthy people, they were to some degree less affected. Now I think a cost of living crisis and increasing inflation is somewhat different to that, and we may find that has more impact on our core audiences. But yeah, I'm guessing at this stage, I think.
Cool. There's a couple of questions. One's more broad and one is specific to regular giving, but it's essentially the same question. What do you think happens with regular giving in the coming months based on what we've seen this year and previous years? And then also there's a broader question, where do you see these trends as a whole going forward?
Yeah. I think the trends are probably going to continue. So you know, as I said through the slides, I think that shift back to regular giving, shift slightly away from one-off donations will continue to some degree. I don't think we'll get back to where we were, but I think that will happen. I guess it all depends on where the economic crisis goes. I'm not Chancellor of the Exchequer, fortunately, and you know, I wouldn't want to guess that, but I think, you know, if we see things continue to get harder, we will unfortunately see these trends. I do think what we've seen previously is that where these cutbacks tend to come, they tend to come back initially. They tend to come through initially. So again, looking back to 2008, what we're seeing was very much, you know, a kind of short period of adjustment where people made, you know, cut back on their regular giving, perhaps where they saw they were going to need to do that. So it's possible that may be what we see this time, that, you know, what we're seeing now and in you know, maybe next month or so will be that adjustment, and then it will settle down to some degree after that. That's possibly a hope rather than anything specific.
Cool. And then there's a follow-up question to that, and then again one that's slightly more broad. So the follow-up question is what can we do as charities to keep regular givers and lower attrition rates? And there's a kind of more specific question within that, whether there's any analysis on whether offering regular giving payment breaks has a better retention outlook in the long term, or better financial return in the long term.
Yeah. I'll answer the second one first. I know that's a technique that people have used, and it's probably what I would suggest in answer to the first question. But having said that, have I seen any specific analytical evidence of the benefits of those results? No. So should I be advocating something that I haven't seen data evidence for? Possibly not. That's a different question. But I do think sort of payment giving holidays or reduction of holidays do help to retain people. Looking at survey results that are going on at the moment and talking around the industry, you know, this is not a downturn in people not wanting to give. It's people unable to give. So if you can give them those breaks, if you can keep engaging with them, if you can cut their giving temporarily, I think all those things will help you come out the other side, because people will return to the levels once they are able to. And you've got to continue to engage your supporters through these periods, even engaging them in different ways as well, sort of non-financial ways. Are there ways that you can get them volunteering, campaigning, or all those other touch points that your supporters can have with your charity?
Cool. This is a brilliant question. It puts you right on the spot, John, because you're going to dictate the strategy for everyone who's on the webinar now. But someone's asked, would it be fair to say that charities should be focused more on retention or acquisition during these uncertain times?
Yeah, good question. I have a fairly simple answer to that, and I don't think it's relevant to whether we're in uncertain times or anything. I think you've got to do both. I think a strategy that looks at one without the other is not a strategy worth having. You've got to retain your supporters. An acquisition strategy that does not retain supporters is the leaky bucket, and you know, I've seen plenty of evidence over that of the year. It doesn't work. So you've got to retain supporters, but equally you've got to accept that you are going to lose supporters, you know, through various reasons. Despite your best efforts and retention, you know, supporters are going to go elsewhere. Other circumstances are going to hit them that mean that they can't give. So you've got to keep feeding that pipeline. So perhaps maybe it's a get out answer, but it is, you know, you really have to do both. And you know, I don't think that the sort of times that we're going through really affect some of your overarching strategies and tactics. You know, it's still all about engaging supporters, giving supporters what they need, and giving them that in a timely fashion, and using the data to help you understand that becomes more imperative at these kind of times.
Cool. This question came in. I'm not sure whether it came in to do with a specific section of the report or it's more broad. But someone's asked, which KPIs should we be monitoring to understand these changes?
Yeah, so really good question. I think a lot of the KPIs, hopefully, that I've run through in the report are sort of indications of that. You know, clearly income is your top level. That's what drives your organisations. But things like active supporter volumes, I think, are really key to understand. And then I would start to break that down further, which we haven't done, you know, at this top level, but I've touched on it a little bit through the slides. Is, you know, understanding who it is that's being affected by the giving. So if you're seeing a drop off in responses in your cash appeals, or you're seeing attrition on your regular giving file, really drilling down into your support, if you have a supporter segmentation or something along those lines, to understand, you know, who is it that's still giving? Are you seeing that drop off of the low value givers? Is it the new donors that are being affected more? Is it your long-term loyal base that's being affected more? All of these things will help you, you know, understand the scale of what you're facing, but also then understand, you know, what you can do about it, who it is that you need to address. So I think, to me, probably the biggest advice I'd give on that is breaking any of your KPIs down to a sort of supporter segment level. And by that I mean things like, you know, new supporters, high value supporters, long-term supporters, those kind of things, to see, you know, where the effects are being most felt.
Cool. There's a question here around how do people get access to the benchmark reports themselves?
Yeah, okay. Benchmark reports are available to all our Insight Hub subscribers. So any of the charities on the platform, you get automatic access to that benchmark. Unfortunately, at the moment, that's the only way to access these beyond things like this webinar and the reports that we release. We do a sort of very brief monthly snapshot of what we're seeing, which we release on the website and on social media, etc. We do plan to sort of start using this data a bit more to understand, you know, to release other bits of insight into the sector on broad trends and so on. If you've got specific questions, then we're always happy to sort of talk and try and answer those where we can. But in terms of really going into the detail, you know, as an Insight Hub subscriber, you get access to all the reports on your own data, but you get access to benchmark reports that go far beyond sort of what we're showing you here at a very, very top level. So you can start breaking down by different channels, different products, so channels within products, demographics of supporters, and the things I've just talked about now. You still there, Josh?
Sorry, I was on mute reading the question out. I said there's a question which wasn't asked as a follow-up to that one, but does make a good follow-up actually, and it says, do you share our information with other charities? And I think they're probably talking about personally identifiable information or organization information.
Yeah, no, all the data in the platform is anonymous, so there's no personal data in there. And actually, from a benchmarking perspective, if the question is about this as well, all the benchmarks at the moment are aggregated. So what you're able to do is compare your performance against the performance of the sector as a whole. We don't share individual charity performances at the moment. One of the things we plan to do as we get more people onto the platform is start to let people break down their benchmark comparison to small charities or animal charities or subsectors and so on. But we don't plan to go down to sort of individual level at the moment to protect your valuable information.
Perfect. So there's a few other questions that have come in, but a lot of them are around data sources and definitions. So I think what we'll do with those is reply individually to the askers after the webinar, because some of them are quite niche questions. But unless anyone's got any other broad questions or questions about the presentation and the findings, we could probably end the webinar there. Cool. So yeah, nothing else coming in. So in that case, everyone who's registered to the webinar will receive a copy of the report. It's due to be published next week. It's with our publishers now. You'll also receive a copy of the recording if you want to rewatch and hear John's lovely overview again. That'll be coming up probably Monday or Tuesday. So thanks everyone for joining. And yeah, we'll follow up on all those additional questions today and tomorrow.
Yeah, just to add to that, thanks from me. I hope you found it useful. Hope you found some interesting insights. If you do have further questions on those, we are happy to talk, and some really good questions. Some great questions that came through. I hope I did some justice in answering them. Obviously, I can't give you all the answers to everything, but hopefully there's something that you can take away from that. So yeah, thanks all for attending, and enjoy the rest of your day.